Welcome back. Lower coal prices and logistics challenges have weighed on Exxaro's bottom line, with headline earnings per share falling 22%. Despite this, the group has managed to maintain a strong balance sheet and upbeat cash flows, allowing the miner to dish out a special dividend worth about 5.4 billion rand. We're now joined by company CEO Nombasa Tsengwa. Thank you so much for your time, Nombasa. Now, we did see a downward trend in your financial metrics. Is that solely pegged on the downbeat coal prices and Transnet headwinds?
Absolutely. Thank you, Zinati. Good to be here. It is indeed those two key drivers. As you know, our potential of exports have been almost halved. We have a potential to export between 8 and 10 million tons, and we ended up with about 5. And then pricing, just to show you how 2022 was a bumper year, average price was sitting at about $250 per ton, and it went as low as about $110 per ton this year. So you can see the difference.
Yeah. And I mean, just sticking to those coal prices, are there maybe any bright spots or prospects in demand that you are seeing that could maybe, lift those prices, at least in the short to medium term?
Let me talk about something that firstly we did very well to really buffer us, against these low prices.
Yeah.
Has been our product mix. As you probably remember, we had invested a lot of billions to make sure that we up our higher product quality of coal in our mix. And that has really yielded very good results in terms of our average realized price, which was 95% against the API 4 index. But let's look at some interesting developments in this year where we've made some great inroads into Japan, which is a high quality destination. They're trying to diversify, so that they don't rely on one source, which is Australian coal. So that's exciting news, coming from our side. But another shift, which was quite interesting, has been because the price has shifted. You always sometimes get an upside in markets like India.
Okay.
The Indians, when the market goes down, then they come in and then they sort of up their demand. So as much as the price is not as high as we want it to be, we do see some good movements in the right markets where we play quite strongly.
Yeah. Operationally, how did you fare?
Look, it's been a very tough year in terms of operations, just starting with our Grootegeluk operations. Grootegeluk, as you know, is a supplier to Medupi Matimba. So large volumes going there, out of the 30 million tons that Grootegeluk is producing, they take a minimum of 25. Yeah. So out of that, there was an amount of about 1.2, 1.5, million tons that they did not take in the past year. And what that happens, it slows down your rhythm because you've got full stockpiles, which also, adds to your cost. So yes, it's been a challenge in terms of production in that regard. Then looking also in Mpumalanga. Mpumalanga, even though we had potential great capacity to produce, again, because we're constrained by the trains not picking up the coal, we had to slow down our production. Yeah. So those were the critical issues that have caused us these challenges. But if you look at the Eskom problem, we are told that they'll be able to fix their challenges, which they've experienced in the previous year. So we're looking at a slightly better year than the previous year, and always hoping for Transnet improvement so that we can come back to our rhythm of producing at the right levels at the mines.
Yeah, indeed. Well, looking at some bright spots there, iron ore prices, we did see an increase over there. Do you think the runway there is on solid ground?
Well, we look at China, all the time when we look at the steel output. We thought that there was going to be some easing off in as far as the policy of steel output in the Chinese market, and we didn't see that. So we are looking at this, with interesting eyes. Yeah? The prices have not been disappointing because of that Chinese performance. So let's see what happens.
All right. How much of a boost, moving on to your other business, the renewable energy business, how much of a boost was your wind power business, and how much momentum are you pricing in for that?
Well, if I hear you correctly, you're talking about our performance in our wind farms.
Yes.
Look, the performance on the wind farms wasn't as great as the previous year. We had a serious low wind factor in 2023, which we see now at the beginning of 24, turning around. But, we were not significantly low to the extent that we were able to keep our EBITDA margin at 80%, which is quite good. And what really comes handy in these operations is that even though sometimes your revenue could be lower, your cost factor, buffers you such that we're able to have such good EBITDA levels. So very, very healthy business we're looking at there.
Well, talking about health, you have declared a special dividend even amid the headwinds. And I'm actually wondering, what was the motivation and capability behind this?
Well, we've always promised our shareholders that, yes, we have got a cash preservation program of between 12 and 15 billion rand so that we prepare for our acquisition program for all of these renewable energy businesses we're looking at, or some of investments in these new minerals that we're looking at. So we promised the market that when we make extra cash beyond that, we will return the cash to them. And that was the amount of 2 billion that we are actually returning to shareholders above the net cash position of 14 billion that we're sitting with.
All right.
14.8. So it's still, there's excess for us, and there's no reason for us to be keeping the cash. Otherwise we will not be keeping to our promise.
All right. Well, thank you so much for that and giving us insights on those numbers that we saw coming out of Exxaro. That was the CEO of Exxaro, Nombasa Tsengwa.